Ladies and ladies and gentlemen, good day and welcome to the Q1 FY26 conference call to discuss operational and financial performance for Rajshree Polypack Ltd. As a reminder, all participant lines will be listen mode only and there will be an opportunity for you ask questions. Please note that this conference is being recorded. Today we have with us Mr. Ram Sarup Thad, Chairman and Managing Director, and Mr. Sunil Sharma, the Chief Financial Officer of the company. I will now hand over the call to the management for their opening remarks, after which we will open the floor for questions. Thank you, and over to you, Mr. Ram Swarup Thad.
Thank you, Mahipal. Good evening, everyone. Welcome to the Q1 FY26 earning call for Rajshree Polypack Ltd. It's great to have you all here. Joining us from Rajshree Polypack is Mr. Sunil Sharma, our CFO. I hope everyone has had the chance to review the investor presentation, which offers a detailed overview of our quarterly performance. For Q1 FY26, we achieved the turnover of rupees 82.52 crores compared to rupees 78.70 crore for the same quarter last year, reflecting a growth of 4.85%. The EBITDA for Q1 FY26 stood at 12.08 crores, up from rupees 11.59 crores for the corresponding quarter last year. There is a marginal decrease in the EBITDA margin from 14.72% in Q1 FY25 to 14.64% in Q1 FY26. Additionally, the company earned a profit after tax of rupees 4.10 crore for the Q1 FY26 compared to 4.03 crore for Q1 FY25. In terms of geographical sales, our export business delivered a robust performance, rising from rupees 9.19 crores in Q1 FY25 to 13.40 crore in Q1 FY26, a healthy 45% year-on-year growth, and now contributing around 16% of our total revenue. Due to early monsoon this year, the domestic demand for the packaging product was subdued, with domestic sales remaining resilient at 69.12 crore as compared to 69.51 crore in Q1 FY25. Due to the underlying strength of our customer base and distribution network, we expect to grow the business despite the challenging market environments. Looking at a product-wise revenue breakup, sales of thermoform packaging product decreased by 1.6% from 55.10 crore to 54.22 crores, primarily as mentioned earlier due to early monsoon, while sheet sales saw a moderate increase in about 3.33% from rupees 14.690 crore to 15.18 crores. The injection molding segment has been growing consistently, and we generated 12.86 crore in revenue this quarter, a significant increase of 106% from rupees 6.24 crore in the same quarter last year. On the capacity front, we expanded our thermoforming capacity by 600 metric ton, taking the total to 12,120 metric ton, further strengthening our ability to meet the growing demand. Capacity utilization levels remained strong across segments, with extrusion at around 94%, thermoforming at 82%, printing at 93%, and injection molding at 115%. Further, I am glad to inform you that the company has commenced production at Unit 3 Daman during this quarter. The unit shall primarily focus on manufacturing PET packaging products meant for distribution in domestic market as well as exports. At the same time, we are also enhancing injection molding capacity from 3,300 metric ton per annum to 4,800 metric ton per annum to cater the fast growing demand of the product. The expanded capacity has already become operational in the ongoing quarter as we speak. We have also added sheet extrusion capacity of 1,800 metric ton per annum and thermoforming capacity of 650 metric ton per annum in the ongoing quarter at Unit 3. In terms of product development, I am pleased to share that we have developed and introduced 6 new products during the quarter across food packaging segment. We also added nearly 31 new international and domestic customers in Q1 FY26. On the marketing front, we attended National Restaurant Show exhibition at Chicago in May 25, where the response has been encouraging. The company is working hard to convert this positive response into more export sales in near future. In case of Olive Ecopack, the company has delivered a turnover of approximately 7.85 crore during Q1 FY26, comprising export sales of 0.96 crore and domestic sales of 6.87 crore. This is lower than expected, primarily due to overall slowdown in food service segment, which generally is a weak quarter for the industry as a whole. The EBITDA loss for the quarter stood at 1.76 crore compared to EBITDA loss of 0.79 crore in the corresponding quarter last year. Capacity utilization for the Olive Ecopack remained at 454 metric ton for converting and 393 metric ton for coating. With the festive season, we are expecting demand uptick during upcoming quarters. Further, Olive is receiving export orders from multiple countries, which also contribute to the overall business momentum. With that, I look forward to your questions. Anybody who wish to ask the question can raise the hand.
Any participant wish to ask any question can raise the hand.
Hello,
Yeah, good evening,
am I
Vishwendra.
audible, sir?
Yeah, very much, Vishwendra.
Hello,
Yeah, you are audible, Vishwendra. Hello.
hello.
Yeah, you are audible, Vishwendra. Go ahead.
So I wanted to ask, what is the current capacity utilization for each segment, that is injection molding, extrusion, and thermoforming segments?
Can you be little loud? Your voice is not very clear. Vishwendra, can you be little louder? Kunal, can you unmute Vishwendra?
Yes, sir.
Yeah, Vishwendra, go ahead.
Hi, sir. So I wanted to ask, what is the current capacity utilization for each segment, that is injection molding, extrusion, and thermoforming segment?
Yeah, extrusion is at 94.22%. Thermoforming is approximately at 82%. Printing is at 93%. In injection molding, we stretched to 150%.
And so, are you expecting any further capacity expansion for any of the three segments that we have introduced?
As I mentioned in my speech, we have increased our injection molding capacity in 3,300 metric ton to 2,800 metric ton. And we have also added extrusion capacity, 1,800 metric ton per annum, and thermoforming capacity of 650 metric ton, unit 3. Plus, we look forward to adding capacity of sleeving of 500 lakhs pieces per annum within 2 months, and a new innovative decoration technology of paper wrap around of 240 pieces per annum.
So, are you planning to introduce these in the current fiscal, sir?
Yeah, within next quarter, we plan to introduce this capacities.
And like, do you have an internal ballpark revenue contribution from these in this year?
Yeah, can you repeat that?
Are you expecting any revenue contribution? And if yes, how much can it contribute? These new two lines.
Yeah, for injection molding, we expect around 20 to 25 crores of revenue. And for this additional thermoforming, sleeving, and paper wrap around, we expect additional 10 to 15 crores of revenue.
Additional 10 to 15 crore from paper craft. Am I right?
Yes, sleeving and paper wrap around.
Okay. Okay. And on the joint venture, I wanted to ask what is the revenue for this quarter and what was the EBITDA loss for that joint venture?
Revenue was 7.83 crore and EBITDA loss was 1.76 crores.
Can you please repeat, sir?
7.83 crore revenue
Okay.
and EBITDA loss was 1.7 crore.
And you were targeting that the joint venture will break even this fiscal. So are you going ahead with that guidance, sir?
Yeah, we were looking to break it in Q2, Q3. We feel it may be delayed by one more quarter. But looking at the order book currently, what we are having, we definitely foresee to break even in Q3 or Q4.
And lastly, I want to ask about your exposure in the US market. So this current tariff situation, does it impact our revenue guidance for this year?
We are monitoring the situation. Our overall exposure to US last quarter was around 9 to 10 crores. So we, in short term, we foresee that maybe 50% of the revenue may be impacted, but we can cover that through the sales in domestic market and other countries. And we are also working on some alternate plans to mitigate this risk in long term due to tariff.
Okay, so despite these tariff situation, you are strong on your guidance of 15 to 20% top line growth.
Yeah, we have given guidance of around 360 crore on the top line for this financial year, so which still remains intact, I would say.
And sir, on the EBITDA margin side, you guided for an improvement of 1 to 2%. So are we looking at that as well?
We're looking around 15.5% EBITDA. So we were at 13.5. So gradually 14.5, we are now looking at 15.5% EBITDA in next 2 quarters. Yeah.
Okay. Lastly, I wanted to ask what is the total exposure towards a joint venture, both loans and investment, equity investment?
We have invested around 39 crores in terms of equity and unsecured loans. And the total loans are term loans around 7 crores and CC limit is around 30 crores.
Okay, noted. Thank you, sir.
Any participant wish to ask any question can raise hand. Any participant wish to ask any question can raise hand. Any participant wish to ask any question can raise hand.
Hello, sir. Am I audible?
Yes, Mr. Augustine. Good evening. Very
Yes,
good.
good evening, sir. Good
Yeah.
evening, sir. Congratulations on a decent set of numbers. And just my question is regarding this US tariffs, actually. So this 50%, if it suppose it is material, are you like fairly confident that we will be able to? Because just wanted to understand, because we are growing very aggressively in exports, like from 9 crores, you have grown to 13. So what is the contribution of US in this export sales?
Export sale, as I mentioned, was around US was around 9 crore roughly.
Okay, so major chunk is USA.
Yeah. So
So
we
this is suppose, yeah, if this
go ahead,
50%, yeah, if the 50% tariff is suppose it is becoming material, then are you reasonably confident that because you're planning to raise your exports to 50% of the overall sales rate in future? So that plan is intact, or is it like you will have to find some other market to? What is your thoughts there?
See, this is situation is very dynamic at the moment, I will say. So we need to wait for another one month or 45 days to have a concrete clarity, I would say, on how things will be in long term. Because when we are speaking to various people in the industry, everybody are still confident that probably this will go back in the range of 20 to 25%. If we see the other countries from which there is a competition, especially Vietnam or Indonesia, they are all in the range of 20 to 30%. So even if we are in that particular range, we will be still competitive. But as I mentioned, we are also working on some alternate plans. And if it still remains at 50%, we are working on some plans so that the business is not affected.
Okay, sir.
Short run, there can be an impact, but long run, definitely, we have something in place to take care of this.
Okay. Sir, on this JV, you are like, I mean, there is a slowdown. The Q1 performance, I mean, looks little subdued. I mean, the sales has been. So, are you seeing any slowdown, like the plans? Like, why is there a little bit of low sales?
Definitely, it is not growing as per the expectation, and this is painful. But Q1 generally for this segment is little slow. And if you see QSR segment as an overall, as a QSR industry was very subdued in this particular quarter. So for olive, Q1 will be little slow because in summers and all, the offtake for coffee and tea is little slow generally. So we definitely are getting good orders now as we are entering into festive season. Plus, we are getting repeat orders from apart from US, from other countries. We are getting repeat orders, which is a good sign. Of course, there were very good prospects from US also, and our quality was accepted by 3 or 4 major clients over there. But tariff situation, this may get little delayed. But we are working on some plans so we can mitigate this particular situation.
So going forward, Q2, Q3 will be better for JV, but for the India domestic remaining business, Q3 may not be that, because generally
Q3 generally is slow for us, but Q2 we are looking anywhere between 85 to 90 crores of revenue for Rajshree.
Okay, Rajshree. Okay. And so doing 100 crore per quarter will be how far? Will take another 1.5 years, or like what is your?
In terms of capacity, I would say we are roughly at around 380, 390 crores. We can definitely do that number. So we are just waiting for the markets to improve a little bit. And if that happens, surely we should reach that number of 100 crores in next two to 3 quarters.
Okay, sir. And in the presentation, sir, for this JV, if you can give a little bit more information, like how much sales it has done, like that will be, but generally you're giving the capacity, but sales numbers are not present there. I mean, just I had a view.
Noted. We'll include those in
the more detail on the JV. And finally, sir, just one more thing wanted to add. Like, if you see the like the performance of the stock price, I know it's out of your control, but still, it had a nice run up, but towards last maybe the Q3 onwards, it has been very subdued. And despite all the good efforts and like some of the peers, some of your peers, even though it came down, it reverted to its previous level. But we are still in on the lower level, and it's actually inching downwards because our plans are getting delayed, and because of these developments, I don't know how market will take it. But what do you think, sir? I mean, is there any other like buybacks or any other thing which we can like bring more institutions, give more what do I say, road shows or anything, so that at least the investor will get it, because we are valued at least 0.5 times price to sales, because that's very. Despite all these levers in your hand, we are getting a very poor valuation in terms of business valuation. So, what is your thoughts there? I mean, can you just give a comment on that?
Like as you mentioned, like generally these things are beyond our control, but we are definitely working to improve the business and the numbers. And with JV also starting contributing in next 2 to 3 quarters. And at RPPL, once we reach this 380-400 crores, we definitely will see a further improvement in the bottom line for the Rajshree numbers. So numbers will definitely support this. And apart from this, probably we can look at certain more investor related presentations or more interactions with the investor community to see if something can be done on improving the prices.
Yeah, thanks a lot, sir. If you can do that, it will be really grateful. Yeah, thanks. And all the best for the remaining part of the year, sir.
Thank you. Thank you very much.
Any participant wish to ask any question can raise hand.
Hello.
Yeah, good evening, Suresh.
Good evening. Sorry, I joined late because I got this link to get into Zoom just now. So I'm sorry, I must have missed more than 25 minutes of this call. In case if the questions have been asked, pardon me.
No worries.
Okay, fine. So first is about the extrusion. I think we had added 4,000 metric ton.
Just a minute.
So taking the overall capacity as mentioned in the presentation to 24,000.
Yeah.
Correct. So that means per quarter we have 6,000 metric ton of capacity. I don't know how much is practically possible being a batch. I don't know. But Q1 you have mentioned the production as 5653.
Yes.
So that means it is almost 94%.
94.2%. Yeah.
Correct, to be exact. Right, absolutely correct. So the question is, that means does it require now some more increase in the capacity? If so, is it possible within the 2 plants?
Yeah, as I mentioned in my speech, maybe you have missed since you have joined late. We are adding another 1,800 metric ton at Unit 3. So that will be additional capacity which will come up into the extrusion.
So that when it is expected?
Maybe in another 2 months' time, it will be operational.
2 months. So that would take care of the whatever the additional demand.
Yeah, additional demand.
And this Unit 3 is what? Sorry, I missed. Is it at the Daman only or somewhere else?
Yeah, this is located at Daman only.
I think you have got some more additional space.
Yeah, we have taken one space on rent. It's around 60-70,000 square feet. So this is basically for manufacturing of PET packaging products, which will take care of domestic as well as the exports market. So there we will be adding 1,800 tons of extrusion and 650 metric ton of thermoforming capacity.
Okay, good. So that means this unit having 60 to 70,000 square feet means this should take care of your next 2 to 3 years minimum, whatever the demand, right?
Yeah,
that
at least
space.
And we, as mentioned earlier, will not be doing any major capex. We'll be doing small capex at Rajshree for next 12 to 14 months. We'll like to consolidate and reduce the debt. That is a strategy for next 12 to 14 months.
Okay, fair enough. So regarding toll manufacturing, I think the capacity there again, 3,300 it says, but we have done 3,796. So
Yeah,
if you
so
can
we have done 115%, and we have already added 1,500 metric ton capacity and taken this to 4,800 metric ton per annum. And
Okay.
this capacity, as we speak, is already operational.
Oh, but then why investor presentation says 3,300?
Because it was as on June.
Oh,
June
okay.
30th. And if you see our intimation to the exchange, we have intimated about this capacity expansion.
Okay.
Uh,
Now, is it possible to tell us how much the revenues that were generated in FY25 and how much is expected in 26 with this additional capacity?
Yeah, for injection molding, FY25. No, from injection molding.
Correct. That is tall manufacturing, right? When you say injection.
Yeah. So you
Correct.
want last year or this quarter?
No, I'm saying okay, FY25, if it is there with you right in front of you, you can give. Otherwise, you can tell me Q1 FY26 also, whichever is available.
Q1 FY26 injection molding, we generated revenue of roughly 13 crores.
13 crores. Okay. So that means can we expect around 60 to 70?
And for the full year 24-25, we generated 42 crores.
Oh, very nice. Okay.
And we expect this to go to 65 to 70 crores.
So 25, you said 42 crores, right?
Yeah.
And for this year, how much?
65 to 70 crores we expect for this year.
Okay. Now, were we PAT positive last year?
Yes, for injection molding, we were.
We were. So, and that means now the 65, 70, no need to ask. It is obviously, it will start generating the.
Yeah.
Okay, fair enough. Sir, my third question is regarding the olive. So I think now only I'm seeing in Q1 out of that, I think 30,000 odd capacity we had done. I think some hundreds of, few hundreds metric ton has been produced. Why is there was so much of delay?
See, I will say on the operational front, there are no major issues as such. Quality wise, the quality has been accepted across all the segments. It is the customer building which is going on, and I would say 50% of the revenue will come from exports. So the export building of the customer is taking little longer time than expected. So we did around 450 metric ton in converting and around roughly 400 metric ton of coating from the capacity what is available. And quarter one is little subdued for olive, both for domestic demand and also the QSR demand was very subdued in this particular quarter. Hence, it was little down. Now, with the festive season coming up ahead, we have good orders in hand for domestic segment, as well as we are receiving repeat orders from various customers from multiple countries also. We also had a very good round of exhibition at Chicago, and we are having good prospective customers in US, but this may get little delayed due to tariff situation. But we definitely have plans to mitigate this, and we expect revenue of at least 4 to 5 crores per month coming from US market itself from olive.
Achha, now, whatever the orders that you are posting in the exchange, is it for the olive or the tall manufacturing?
No. On the they are combined, like it is not for any particular segment as such. We have for our thermoforming business also, injection molding business. Olive we are not posting orders detail directly as such much.
Okay. Now, this olive, we were supposed to commission, if I recollect properly, by Jan or March 25. And, well before that, maybe, October, November, something. And we were expecting, already some 30-40% capacity utilization by 24 and almost 75 to 80% capacity utilization last year. But even now we are into Q1.
We started production in June 24. As mentioned earlier, we took longer time to stabilize the things because we were not able to get the support of the engineers because most of the machines were from China.
Okay.
And as you are aware, like the Indian government is not issuing visa to the Chinese nationals.
Okay.
It took us for 3 to 6 months to stabilize the production. So by
Okay.
October, November 24, we were able to stabilize the production.
Ah.
Gradually, we started building up the customer base. So as I mentioned, like we are looking at three segments from Olive. One is through this distribution sales channel in the domestic market, which has been established, from where we are looking at a revenue of around 4 to 5 crores per month. Exports, we are looking at 5 to 7 crores of revenue. And third segment, which is going to take longer time, is the institutional sales, like brands like McDonald's or Burger King, and many more. So that we are expecting a revenue of 3 to 5 crores. So like that, this particular revenue segment we were looking from Olive. So I will say domestic more or less is established, and we are in line of generating revenue of 4 to 5 crores per month from next month. We are roughly doing 2.5 to 3 crore. Export has picked up to 2 and 2.5 crores per month. In next 2 to 3 months, it should also go to 4 to 5 crores per month. So we are hoping that within next 2 quarters, we should be in the range of 8 to 10 crores per month of revenue from Olive.
From
Olive.
Oh, matlab from September onwards, we can expect around 8 crores per month.
Yeah, September, November, October onwards, we can expect that 8 crores of revenue from Olive.
Okay, so that means even in Q2, we will not expect much difference.
Yeah, Q2, it will be in the range of 13 to 14 crores revenue.
Okay. And for it to, what do you say, become EBITDA positive, what is the minimum revenue expected?
22 to 25 crores.
Acha. See, what I was trying to, just to find out, as you rightly said, by October 24, October you had stabilized with the background of your experience and the other partners distribution channel. I think we had expected that this will ramp up very fast. But based on that, do you think we are on the right track now, keeping after October onwards?
I would say in terms of production process, the product quality, we are on right track. There were teething problems which were solved, but as I mentioned earlier, there is no issue with our quality. Wherever it has gone, it has been very well accepted and appreciated. Although, like, we are little higher on the pricing front due to our technology and the product quality, but we are quite hopeful that we should be able to reach at least 50-60% of our capacity within next 2 to 3 quarters.
Okay, fair enough. This barrier packaging, what is the current utilization in the sense exclusively for barrier film?
Yeah, barrier, we in 24-25, if we see, we did a revenue of roughly 50 crores from barrier as a segment.
Okay.
Quarter 2 generally is strong for barrier.
Okay.
So in this year, we have done approximately 7 crores in Quarter 1. So we are expecting doing in same line of around 45 to 50 crores for this year also. So the overall capacity for barrier is around 65 to 70 crores.
Correct.
So we will be approximately utilizing 70% of the capacity what is there.
Is this product now barrier film is slowly accepted, particularly by the sweets makers or wherever it is supposed to go?
Yeah, it is going to big brands like Haldiram's and even to sweet makers in cities like Meerut.
Okay.
So this segment is growing extensively because even the packaging machines which are required along with this packaging material are getting cheaper, and many options are available across the country now.
Okay.
For the sweet manufacturers to invest in such machines have become feasible now.
Very nice.
Yeah.
So now 62 questions. One is, are we making good margin in this as it was intended, earlier? And
Yeah, this
second,
particular segment is definitely having a better margin.
better margins. Okay. Now that you are saying we are running close to the full capacity utilization and the sweet makers are getting the whatever the machine that they require to pack at a very feasible rate, will we go ahead and put one more machine or not?
As I mentioned earlier, at least for 12 to 15 months, we will avoid any major capex.
Okay.
The idea is to first consolidate and reduce a little bit of debt, and then we take further decision into any major capex.
Okay. But in spite of that, last year again, the debt March was 86, but March 24, sorry, March 25, it has again gone to 116 crores borrowings. So it hasn't come down, right? Because last year also we have not done much of capex other than a little bit here and there.
I'll let you know the borrowings.
This I'm saying 31st March, whatever the figures I mentioned now.
Can you tell me what is the number?
As
No,
per
just-
given
no,
116.
I'm just asking my
Oh,
June,
sorry. Okay.
June. Huh? March was 103.
Oh,
And now
oh,
it's 96.
is this a long-term one?
Both long term and short term, both.
But I think March it was 116, right?
103.
116 is what is given there.
Huh? There is certain lease liabilities which are not direct.
Okay. Okay. Now, okay. Let me rephrase my questions. This 96 crores, which is there as on 30th June, how much you are expected to bring it down?
We expect to bring it down by at least 15 crores in next 4 to 5 quarters.
Oh, that is very small amount, right?
See, we will also have to do small capex, as I said, to keep growing. Plus, we will be also increasing our top line. So we will need some money for business also.
Okay.
So because we were at around 325 crore and we are looking at 360 crore. So obviously some money will again go back into business also.
So in spite of all that, this is what the plan. So 4 to 5 quarters, if you're saying, so can I say it's around 80 crores by next year end, right? Almost.
Correct? 4 to 5. So you can say by quarter 1, 26, 27, look at that number of 80 crores.
80 crores. Okay. Now I think Orissa, you have mentioned in the presentation that land has been acquired. But now you're saying 12 to 15 months, you are not looking at any major capex. So I think next year only we will be thinking something about that plant, right?
Yes.
Okay. And last question is this revenue margin. I think you're saying 360 crores for this financial year?
Yeah, 360 crores.
Okay, fair enough. And what is the margin you're targeting?
EBITDA, we are looking at around 15.5% with a PAT of around 5 to 5.5%.
At 5 to 5.5. So there you're confident that there is not much changes going to happen.
Yeah, as of now.
As of now, okay.
Don't anticipate any major disruption in this.
Okay. Now, sorry, one more. I'm just asking, squeezing in. That is for the tariff one. Whatever we are doing the export, I think you keep mentioning about US market once in a while in the order that you are posting in the exchange. So will it affect our sales there?
Short term, yes. For long term, like we are all hoping that probably this situation will improve in next 30 to 45 days, first of all. If not, we are having some alternate plans to see how we can safeguard the business in long term.
Okay. Okay. Thank you very much for your patient hearing and answering the question, and wish you all the best.
Thank you.
Any participant wish to ask any question can raise hand. Any participant wish to ask any question can raise hand. Any participant wish to ask any question can raise hand.
Kunal, as there are no further questions, you can take it for conclusion.
Okay. There are no questions. Mahipal, over to you.
Thank you, sir. Thank you, Kunal. Thank you very much. As there are no further questions, I would now like to hand the conference over to the management for the closing comments. Thank you, and over to you, sir.
Thank you very much for joining this call for Q1 FY26. I hope I was able to answer all your questions to the satisfaction. Wishing you all good luck. Thank you very much.